Yo, what up, guys? This is Hustle Williams back with another episode, and today we're going to be talking about week 2 of my investment portfolio, what has changed, what I think I'm going to do, and how we're going to try and see and hopefully bring a return on these stocks. So, without further ado, let's get into it. All right, guys, welcome back. So, with that being said, this week I got some really good updates for you. So obviously right now our stock is up. Our percentages are up just slightly at 0.53% and 0.12% after hours. We've yielded $1.31 after all our investments. I've actually upped the investment to 248.96, just shy of 250. Over the week we're down 66 cents. Over the month we're up 26 cents. Over 3 months 26. 1 year we're up 2.83% at $6.85, and all time we're up $1.67. So what we're going to do with this now is I'm going to explain to you what my investing strategy is going to be moving forward in the dividend investing sector. We're going to go over all of these one by one so that we can actually break them down and I can show you guys what's going on. So first of all, we're going to go into, we'll start with Bank of America. So Bank of America is a dividend that I've been actually decided one of my first ones to actually invest in. They actually pay out quarterly. So they're paying out at 18 cents a share right now. Since I bought them, they've been doing really good. Nothing bad to say about them. I own 3 shares right now at 105.06, and I've made $1.20 right now. Now, these guys are a little expensive to buy per share for 18 cents, so I have a new strategy that we're going to work on that yields about 1%, and it's going to do with REITs. And what REITs are real estate investment trusts or companies that own or finance income producing real estate across a range of property sectors. These real estate companies have to meet a number of requirements to qualify as REITs. Most REITs trade on major stock exchanges, and they offer a number of benefits to investors. So with that being said, that's going to be my next my next investment strategy is to go with this REIT that I had found. I was looking up high yield monthly dividend producing stocks, and I found this one called ARR, which is ARMOUR Residential REIT. And what I found about ARMOUR Residential REIT right now is that they've been going down a lot over the last 5 years, but it looks like over this year they've had like a slight recovery. I'm still going to ride with them. I think they're a pretty good company. They started to give dividends way back in the day that ranged from all the way up to 96 cents was their highest payout, I think, in 2011 into 2013. So right now they're paying out about 17 cents a share, which is their lowest that they've ever been at. But I feel like they're still a decent company to invest in, and their stock right now is only valued at $18.38. So we're gonna try to do something here. So what I plan on doing is I'm gonna invest in 3 separate companies as well. I was advised to check out IBM, so I'm gonna try and invest in IBM and 3M as well as ARMOUR Residential. But a majority of the money that I'm gonna invest right now is going to go into ARMOUR Residential. Why I'm doing this is because I feel like at 17 cents dividend right now paid out monthly, if I were to buy 12 stocks every month, which is doable at just shy of, let me figure out the math right now, 18.34 times 12 at just a little bit over $220 at 18.34. We'd be yielding a little over $2 per 12 shares that we own, which is something that I feel is doable. And over time, we could gradually build this up. So the first goal is to get this up to a $5 monthly dividend return, because this stock yields just shy of 12% yearly. So we are looking at a return, trying to see if I can find it here, 11.62. So about 0.4, 0.40, 0.38% difference right there. So that's actually pretty good. So it's almost a 1% return every month. So that's not that bad. So I feel like if I can jump in on the stock, and I'm going to buy a bunch of them up right now, and we're going to see how it goes. Now, I'm not a financial advisor, but this is just a strategy I'm going with right now. So I'm going to try and buy $220 worth of ARMOUR Residential REITs every month right now. And then, let's see. And we're going to hope to try and grow this up as fast as we possibly can. The goal is to reach $5 of dividend return right now, and then just reinvest that into ARMOUR Residential as well. And I'm also looking into IBM. Let me just look into IBM real quick. So IBM is another one that I'm looking into. I've heard that this one is a dog of the Dow, so it's been coming back strategically over the last few days. Like, it's really come back from the beginning of the day to like right now. It's up $1 already. So it looks like it's going to be coming back this year pretty heavily. And then also another one that I've been hearing about is 3M. So 3M is like just another company that sells a lot of things that companies use, such as like tapes and other things that companies can actually use on their day-to-day business needs and wants. So 3M is another one that I've heard is a really good investment right now, so I'm going to look into that. And then I'll show you guys my stocks right now where I hold the majority of my funds. Bank of America is probably my biggest one right now, followed by Wells Fargo. Rakuten, eventually I'm going to get rid of that one probably as soon as it goes up in value so I can make a profit off of it. But right now I'm just holding on to it because they were a good company and I use them for my eBay dropshipping business a lot. So I figured I would reinvest in them and show them some support. And ARMOUR Residential, I own 2 shares right now, so just shy, so 17 cents, so 34 cents about right now. So 34 cents is what I'm getting as a return from them, which is not too terrible, but that's where I plan to take this from here on out. And as we look, at the dividend report, if you want to look back at it, this REIT was doing 19 cents at a time. I feel like they got some potential moving out, so I'm just speculating right now, but we're going to find out at least by the end of the month if this is going to pay off or not, and we're just going to keep seeing how these investments grow. Main also, which is another good one, Main Street Capital, I was really going to heavily invest in them. I know that I had some good insight that they're actually going to do pretty good this year too, but at $43 a share, I can only buy so many at a time, and they are also a monthly dividend stock, so they pay me out 20 cents right now, so I'll keep trying to scoop them up as well, but it looks like I'm just going to be investing in IBM and ARR right now, heavily into ARMOUR Residential REIT right now. So I know a little bit about them. I'll read that to you guys right now. So ARMOUR Residential REIT Incorporated operates as a real estate investment trust, which engages in the business of investing in fixed rate, hybrid adjustable rate, and adjustable rate residential mortgages backed securities. It also invests in residential mortgage-backed securities issued or guaranteed by a United States government-sponsored entity, such as the Federal National Mortgage Association, the Federal Home Loan Mortgage Corporation, are guaranteed by the Government National Mortgage Administration. The company was founded on February 5th, 2008, and is headquartered in Vero Beach, Florida. The FINRA listed name is AAR for ARMOUR Residential. So CEO is Scott J. Ohm. They have 21 employees and were founded in 2008. So we're really going to try and see if we can just try and hop on as many of these as possible and just try and ride this wave. Hopefully the stock, raises up. That'd be really good. If not, then we're just going to own a bunch of these stocks and we'll see how it goes. So that's where I'm standing in mine right now. And if you guys like this content and this new type of style of investing that I'm going over with you guys, once again, this is my first time jumping into this. We're going to try and get this portfolio up to 10K this year. I'd like to see a decent return, maybe $100 off of my monthly dividend investing. So I'd like to get up to $100 a month, so that's going to take some time, but I feel if I can hit this pretty hard and attack ARMOUR Residential REIT really heavily, we can start seeing a decent return from them. At least one, we can, so much so that we can buy at least one share again every month. And hopefully as we reinvest, like the dividend payouts start getting larger and we can approach the 100 or at least the $25 range, then the $50 range, then the 75, then the 100. And once we get to $100 on a return, that's going to be really important. So, and then from there on out, we're just going to keep on funding this until we get it up to 10K, and we'll have another review at that. But for right now, I'm feeling really confident with this one, and we're just going to keep on driving it forward. And once I get a return, probably sometime next month, we'll go over those dividend returns so far. We'll see what's working, if anything's gone down, how we can change it up, how we can improve it, and what else we can do for it. Again, if you guys want, hit that subscribe button, hit that like button. I really appreciate all the support, all the comments you guys have been giving me. You know, I'm just showing you guys my process, how we're going about this. We're trying to go into this and, you know, really take over 2020. I'm trying to hit this as hard as I can. I'm going to be dropping a new video on investing every single week, so stay tuned for that. And also, if you guys want, you can check out and click and get a free stock from me if you're not already on Robinhood. And I know I've had some guys reach out to me who are from Europe and other countries, and I don't know if I don't think Robinhood is available yet to you guys, but it will be shortly. So if you guys ever come back and click on that stock, I will shout you guys out on my YouTube channel, and I'll open my stock and I'll show you guys what you picked and what I got, and then we'll go over it from there. Decide whether it's a stock that we'd like to keep or sell, and tell you what I'm gonna do with it. All right. So thanks guys for being a part of my journey. It's been a pleasure, and let's keep this 2020 rolling heavy. And I appreciate you guys, and peace.
I had to make a couple bands by my lonely.